Good morning, everyone. This is Marshall Gidler bringing you the morning comment for April 15th. With the market recently thinking that the U.S. economy was gradually recovering, expectations were for a recovery in U.S. retail sales. However, yesterday's figures missed expectations and the previous 2 months' figures were revised down. Small business confidence fell and the IMF revised down its growth estimates for the U.S. this year and revised up its estimates for the Eurozone. As a result, Fed funds rate expectations fell back and dollar bulls threw in the towel, at least temporarily. The only G10 currency to weaken against the dollar was the Australian dollar, owing to the weak Chinese data, which I'll discuss in a moment. The oil-related currencies, the Norwegian krone, Canadian dollar, Russian ruble, and Brazilian real, were the strongest ones as WTI jumped more than 2%. Our technical analysis suggests oil is likely to move still higher, so these currencies may well have further to go. The Chinese data out this morning showed continued growth, although weaker than expected. Industrial production in particular was far below expectations. GDP, however, was spot on the market consensus at 7% year-on-year, exactly the government's target. However, if GDP is 7% in the first quarter, then it has to be at least 7% every other quarter in order to meet the target for the year. With output, consumption, and exports weak, is that likely to happen? Significantly, Chinese stocks fell sharply on the news, in contrast to the good response to Monday's weaker than expected export data. Some slowdown seems inevitable to me. That's likely to weaken the Australian dollar and, to a lesser degree, the New Zealand dollar. Today's highlights during the European day, the main events will be the ECB and Bank of Canada policy meetings. The ECB meetings last year were the big days for Eurodollar. Eurodollar was usually much more volatile than average on ECB meeting days. However, no new programs were announced in March, and as a result, it was just business as usual for the FX market. With no changes in the bank's policy likely for the time being, I'd expect another relatively normal day today. Some of the questions we might hear today are, could the ECB cut the deposit rate to increase the number of bonds that they can buy? Might the ECB start tapering its quantitative easing program earlier than scheduled if inflation starts to come back? What do they think about the fall in the euro, and what's their view on Greece? I'd expect them to play down any expectations of a change in policy. The Bank of Canada surprised the market in March by keeping rates unchanged and saying that the risks around the inflation profile are now more balanced. Accordingly, the market looks for no move at today's meeting. The Canadian dollar and oil prices have been fairly stable since the last meeting, plus recent statistics have surprised on the upside. With no change in rates likely, the market impact will depend on the tone of the statement and the bank's inflation and growth prospects. I expect an optimistic statement. I therefore expect a further decline in dollar CAD. In fact, the Canadian dollar may well be more volatile today than euro dollar. As for today's economic indicators, in the U.S., the Empire State Manufacturing Index is expected to show that business conditions for New York manufacturers have improved in April, while the industrial production for March is expected to have declined after ticking up in February. That could put further pressure on the dollar after yesterday's disappointing retail sales number. The National Association of Home Builders Housing Market Index for April is also coming out, while the Fed recently releases the Beige Book. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.